let me quickly introduce the group company. And today, in fact, I have been joined by Mr. Rahul Paula, the Director of Business Head. We have Mr. Kala, who's a chartered wealth manager and certified financial planner based on Noida. We have Ritik Singh Rotel, who is a chartered wealth manager and a CFA level 2 candidate. He has the product teams for us. We have Vipul Kumar, senior relationship manager, and virtually takes care of 11 set of clients. Okay. Before I begin the presentation, let me quickly Wise Finserv is a leading financial services company headquartered at we specialize into investment advisory, financial planning, and wealth management. We got three established business units to cater the needs of different set of investors. One is the family office, 10 CR. The second is a private wealth. Is a financial planning unit. The relationship starts with 500. Under an umbrella, very niche services. The large businesses typically need typically assistance in terms of merger, acquisitions, debt syndication, debt restructuring, getting the valuations done for the company. And other services. The second strategic business unit, that is private wealth management. Here are very dedicated, qualified, certified wealth manager who takes care of your wealth. And you will be given about kind of business profile where he allocates your money to different set of asset classes. The third one I will already brief you. It's a retail financial plan. So depending upon the risk profile in the various financial, the relationship manager of the wealth manager is not one such company who invest a lot in human capital and the technology. Since we are managing more than 20,000 client base across globe, it's very important that we are headquartered at Noida and we have got branches at Mumbai, Kolkata, Bangalore. And recently we have opened our branches in Indore also. All right. So let me set up the momentum of the presentation by asking a very simple question: what kind of returns make happy? So at least I'll be requesting one answer from momentum of today's presentation. And forward from it. The returns which generally typically professionals like you, that is about close to 2.5% kind of return. Second, sometimes you have to apply your money to savings linked fixed deposit. That is close to need about 6% kind of return. And then ones which may fetch you returns in the range of 8 to 10%. But obviously, yes, greater than 12% excites the most, right? And the people look forward for such returns. What are the key ingredients to generate a 12% kind of a return? So, forward for 15 to 18%. Yes, there are products where 15 to 18% of returns can be generated, but those asset classes are risky asset classes. So it is very important to understand whenever before you start taking any investment, it's very important to understand what are the various aspects or the things we need to take care of, right? So let's quickly have a look what kind of two important things we should consider making any investment. One is the time horizon, right? And the second is the asset allocation, the mix of investment asset classes you have in your portfolio. So these are the two most important things you should consider before you set up your expectations from your asset from your portfolio. So since I'm talking about the importance of the time, so let's quickly understand from this slide that uh, why we need to really understand uh, the time horizon before making any investments. Typically nowadays is very high. So there are people who wanted to make 12% plus kind of a return in the 30 days itself. There are people who want to the probability return metrics based on the time horizon. So someone who is expecting to make a 12% return in a month, look at the probability to achieve the expected return is the least. I'm not saying that you cannot achieve this 12% return. Of course, you can achieve the 12% returns, but look at the probability of experiencing the negative returns is highly likely. Now look at someone who got a time horizon of 6 months. The expectation to deliver a 12% return is pretty least again. But what is the probability of experiencing a negative return is highly likely. Right. But now let's look at 36 months. That is someone who has got a time horizon of 3 odd years. Right. So 12% is almost certain. And now look at the probability of experiencing the negative return is the least. So before you make any investment, if you think, we keep telling every individual and a people if you have a time horizon less than 3 years, of yours may keep you away from the markets. So if you want to make a very healthy return, well, but I think 12% plus is a very elastic number we are talking about. So look at 6 months, look at 60 months, that is 5 odd years, 12%. So there are asset classes achieving 12% is pretty easy, right? But only thing is that you need to have the time horizon. So that's why I keep saying that time horizon is one of the most important ingredients. Okay, let's look at some other factors also which derive the returns from your underlying securities. So this sometimes depend upon your asset allocation also. Individuals' portfolio may be different. So one individual holding 90% of the portfolio into fixed income and 10% only equity. One individual is holding 90% of the portfolio into equity. With the bull run, the return generated by the individual is 90% into equity. Right. Sometimes two individuals start comparing their returns. It is very important to look at the underlying securities. Two friends talking to each other. भैया मेरे को 12% का रिटर्न बनाया तुमने कितना बनाया मैंने तो 6% का रिटर्न बनाया looks like my wealth manager is not doing good for me. No, it is totally depend upon your risk profile whether you take that risk to generate that. It is very important to look at the underlying composition of your portfolio. Asset allocation mix. The market conditions. Sometimes, markets may be into a bear phase for quite long number of months. The market may be into bull run, right? So generally, the returns will be in the range of 6 to 8% only, right? So diversification. This is actually very important. So you shouldn't only be diversified investment. So if you look at overall motor global economy side, that's near about 200 billion plus. So it becomes important for you to diversify investment internationally, also and geographically also. And within the equity space also, you need to diversify your investment with sector, depending upon the market conditions, on which sector you want to overweight, on which sector you want to be underweight, like how much you need to have into a large cap, mid cap, and a small cap. So diversification plays a very important role in generating a better risk-adjusted returns. Uh, the fourth point is investment strategies. Sometimes it depends upon what kind of investment strategy you are picking up to generate a better risk-adjusted returns. So value strategy, growth strategy, aggressive one. Now, someone with a time horizon of 10 odd years, he wants to be heavy on mid cap and a small cap. So ideally, we have seen that historically, mid cap and a small cap generated more than 15% kind of a return. But someone who is trying to make 15% plus CAGR in 3 years becomes a little challenging. So time horizon, I've already discussed the importance of the time horizon, right? Someone got a time horizon less than 3 years shouldn't be getting into the equity market. The cost and the fee, this is something very, very. So there are lots of. I don't want to quote this. There are people, investment advisor, right? Uh, uh, Generally, they give an asset classes where they're getting most benefit, like insurance product. So I've seen that I have been traveling into the UP and I've been delivering many financial literacy programs where I've noticed and seen that after the program, we used to interact with the clients where we have seen that everyone has got 5 to 6 policies. It's a fat commissions which is being given to these insurance agents. 30 से 32% आपका commission चला जाता है. So you have to be very careful before picking up such policies. I understand policy is something very important to hedge your risk, to hedge your liability. You take a term insurance, but I think one should be avoiding buying all those policies where the IRR is only in the range of 3.5 to 4% maximum. It's very difficult to pull out it's very difficult to figure out what kind of return your policy is giving. So let's just, even if your money is going to get compounded at 3.5%, the advisor most of the time doesn't come, an agent doesn't come and explain you what kind of a return your policy is giving. So 3.5% return, if you are going to get compounded for the next 20 years, you will see that 1 lakh ka bhaiya mera ban gaya hai 10 lakh rupees. You feel very happy that in the 20 years, my money, this is the random figure which I'm quoting, right? But eventually, when you look at every figure into Excel and calculate your CAGR return, हम लोग जब भी बैंक जाते हैं पूछते हैं कि सालाना रिटर्न कितना मिल रहा है. So if you calculate the annualized return, it is not going to be more than 3.5 to 4%. There are good products, but only thing is that the commission structure is so thin that advisor do not recommend those asset classes. So you have to be very careful. Ask questions to advisor. So because expense ratio can eat maximum of your returns. So there are cost-effective products are available, but generally people avoid allocating in your asset just because their own individual benefits. So ask too many questions to your advisor. All right. Okay, since we are talking about very quickly, what are the various different options which are available that will construct a robust portfolio to generate a very good risk-adjusted returns. All right. So the very first one is very popular among the Indian investors or the global investors is the equity. Right. या तो हम stocks buy करेंगे, या हम equity PMS buy करेंगे, या हम equity mutual fund buy करेंगे. So I request all those individuals to whom equity excites you the most. Obviously, yes, this is one. The most attention before, again, to reiterate, before you pick up any equity stock or any equity investment in your portfolio, it is very important that you should not be doing 3 years. Otherwise, it may lead to a large in case if you feel that my financial literacy on a scale of 10 is 7, then probably you may evaluate stocks, right, to buy for yourself. But if you think that no, my financial literacy is less than that, then I don't think that you should be doing experiment with your hard-earned money, because picking a stock is not that easy. No, you need to consider, you need to evaluate lot many ratios. You need to look at the balance sheet, the cash flows, the product, the management, right? And in India, almost near about 6,500. stocks price earning book ratio क्या है, price earning growth ratio क्या है, उनका management क्या है, what are the different changes happening in the management. So it's not very easy, you know, to evaluate all those 6,500 stocks. So before a stocks becomes a part of your portfolio, it is very important for you to thoroughly analyze. In India, where most of the people only pick up all those Nifty 50, 50 stocks, तो भी फिर भी ठीक है. लेकिन I have seen that every individual investor keep asking, एक penny stock बता दीजिए, एक multi bagger बता दीजिए, right? I think it's good to focus on the good quality stocks to construct your portfolio. So I'm talking about the various investment options available under the umbrella of one is the direct. अब मार्केट में आ रहे, इफ यू लुक एट द मंथली एसआईपी का वॉल्यूम दैट्स कॉस्ट क्रॉस नियर अबाउट 14,000 crores, तो काफी इक्विटी एसआईपी हो रहा है. The third one, which is gaining a lot of momentum in the last 3 years, that is equity PMS. So equity PMS ने भी काफी attraction gain किया, especially all those people falling into 30% का tax bracket. The minimum size of the application is 50 odd lakhs. Again, I mean, it's good to diversify your investment within that equity space. The third one is the AIF equity. So I'm going to talk about these niche product in the subsequent slides. The second most popular, हमें 7, 8, 9, 10, 11% का रिटर्न फिक्स दिखता है, हमारा अट्रैक्शन ज्यादा. बट ऑनेस्टली स्पीकिंग, द डेटा सेज दैट मोस्ट ऑफ द टाइम वी एंड अप बाइंग there are thousands of bonds, secured bond, unsecured bond, right? Don't explore them. Look at this space when people say that no, we no fixed income, no. Generally, we have noticed that 95% of the people do not have that great understanding of the various options available under fixed income securities. Either you buy a fixed deposit or a post office scheme, like in secured bonds, state government bonds, right? Debt PMS. You need to explore other options also, which can give you additional 200 to 300 basis returns, market linked debenture. So I have seen that, especially in the tier 1 cities where people falling into more than 30% tax bracket, they end up taking investment in market linked debenture, into debt PMS, into secured bonds, right? During pandemic era, I still remember that. Very rare of the investor were making investment in these secured bonds. Secured bonds are those bonds are backed with the assets of the company, right? So it's very important for you to explore fixed income, right? The cash and equivalent. So generally, just because of the tight schedule, we end or the overnight funds generate returns in the range of 5.5 to 6%. Imagine the SBI savings banks accounts generates only 2.5, gets you 2.5% kind of a returns. बट वही पैसा अगर आप लिक्विड या ओवरनाइट फंड में डाल दीजिए, विच इज अवेलेबल बाय क्लिक ऑफ ए बटन, आज इन्वेस्ट करिए, आप 5 दिन के बाद निकाल लीजिए, राइट? और उसके ऊपर आपको 5.5 सालाना रिटर्न जो 5.5 से 6% का बहुत आराम से अवेलेबल रहता है. सो यू हैव टू एक्सप्लोर मोर ऑप्शंस. So sometime it may happen the most of the large corporates that don't live into the current account, they either get into overnight fund or a liquid fund. So there they generate 5.5 to 6%. All these taxable as per the slab. So you need to explore more options which can generate better return than the savings account, right? And all these from all these funds you can redeem by click of a button. एक दिन में ही आपके अकाउंट में पैसा आ जाता है. आप आज रिडम्पशन रिक्वेस्ट प्लेस करें, कल आपके अकाउंट में पैसा आ जाता है, right? Barring all those strategies. Yes. So nowadays alternative investments are high net worth individuals who falls into a tax bracket of 30 to 39%. पहले 42% होता था, इस बजट के बाद में 39% हो गया है. So I'm going to discuss in the subsequent slides about the alternative investment funds. Okay. Now let's look at the kind of returns. Since I was spoken about return generated by these asset classes. So I have picked up, instead of picking up any particular equity mutual fund or equity asset class, I picked up Sensex the character. Yeah. So I picked up Sensex, I picked up a bond index to gauge out what kind of a return the fixed income securities have given. And the third, very popular in India, that is the gold, what kind of a return gold has given. So if you look at in the last 10 years, I picked up this data since 30th June 2023, the last 10 years, gold has given 6.98% return. Bond has given 8.39% return, and equity market, the Sensex is given 12.80% kind of a return. If you look at in the last 3 years, the return generated by the Sensex is 22.84. The bond index has generated 9.57, and gold has generated 6.13% kind of a return. So here are some of the assured returns instruments which are very popular among the Indian investors. So I have fixed deposits, PPF or savings accounts. It's काफी popular and hence we picked up these three asset classes. If you look at the returns of the last 15 years, savings account has given 3.37. The PPF has given 8.02 and the fixed deposit given 7.15. Now look at the last 3-year returns generated by the fixed deposit. That is 5. This is all pre-tax. So PPF में तो वैसे भी tax नहीं लगता. This is all pre-tax. So fixed deposit has given 5.83. PPF has given 7.10 and savings account has given 2.70. These are a few of the most popular asset classes in India. Now look at whether these asset classes can beat the inflation or not. So most of the time people ignore inflation. So let's look at what was the inflation and whether these fixed income asset classes can beat the inflation or not. So if in the last 15 years, the average inflation was 6.80, the fixed deposit has given 7.15, the PP is given 8.02, and the savings are given 3.37. Now look at the last 3-year data, which is a very recent one. Fixed deposit has given 5.83, the inflation was 5.71. PPF has 7.10, but there is a limitation. We can invest only 1.5 lakhs per year. And the savings account 2.70. So if I consider post generate better inflation adjusted returns, and even if I'm going to add the taxation over here, the returns actually are not great. Now look at the market linked instrument, and if at all I have to compare with the inflation, so we can clearly see that in the last period the inflation was 5.70. The equity index has given 22.84, but we should not only look at the last 3-year return, we should look at the last average 15-year return. So even in the last 15-year space, the inflation was 6.80, the markets are given 11.03. In case of a real estate, it was 7.69, the inflation was 6.80, and the gold has given 10.78, and the inflation was 6%. So we can very clearly see that it is very much evident from the facts and figures in the data that to beat inflation or to generate better inflation adjusted return or to generate better tax efficiency, is very important to have market in your portfolio, right? So since I'm presenting the data in the last 3 years, equity is given this much return. In the last 15 years, it's given 11%, 12% kind of return. Does that mean that entire sum of money our investments should get into only equity? I don't think so. Let's look at what will be the strategy. So before that, let's look at some historical return generated by the Sensex. Why I'm quoting Sensex? अगर आप सब लोगों को लगता है कि no, I don't have that great wealth manager, so I do not have time to evaluate various equity mutual funds, equity schemes. कुछ नहीं करना है, आपको जाके कि index buy कर लीजिए. It is very cost effective. The expense ratio is close to 0.10%. आप लोगों को सिर्फ index fund buy करके छोड़ दीजिए. You will be able to generate a much better return in your portfolio. You need not to even seek a wealth manager or a financial advisor advice. In the last 44 years, the Sensex has given a compounded return of 15.65%. Imagine अगर हमने सिर्फ एक इंडेक्स बाय करके छोड़ दिया होता जिसके अंदर I need not to structure my portfolio again and again depending on the market conditions. Only thing is that if at all I would have a time horizon of 3 to 5 years or 6 or 10 years, your money would have got compounded at 15.65%. So 1979 से लेकर अब तक अगर किसी ने छोड़ा होगा, the money got compounded at a rate of 15.65. And during this tenure, dot bomb bubble wala scam, Satyam wala scam, 2008 का subprime losses wala market correction, it was one of the biggest correction, pandemic का correction. So we are factoring every correction over here. So imagine after all these bada corrections also, the index have generated 15.65%. That if you have a decent time horizon, you will end up making a great return in the portfolio, which will help you actually generating better inflation adjusted return and a better tax efficient returns. So that's why we keep saying that diversify your money into various different asset classes. Thoda paisa gold mein, thoda real estate mein, right? Thoda paisa equity market mein. So how to construct that we are going to look at. But before that, let's quickly have a look. What could be the value of rupees 10 lakhs if invested 15 years ago in all these popular asset classes, right? So अगर हमने मार्केट में 10 लाख रुपए डाल करके छोड़ दिया था तो my value would have been 48.04. If at all I have invested into the public provident fund, my money would have grown to 31.08. If at all I would have left my money into fixed deposit for 8.17, and in case if I would have shoved my money to savings account, it should be 16.44. This is all pre-tax. So this is one of the most important slide of the presentation. Look at how inflation has hammered down the value of rupees 100 to 8.10. So before you start making investment for any of your important financial goal, for children, higher education, for children marriage, or for building a corpus for your business, it is very important to consider the inflation. So most of the people, they start accumulating for any financial goals कि आज अगर बच्चे की पढ़ाई में 1 करोड़ लगना है, right? So 1 crore के हिसाब से invest करते. No, you have to figure out when your children need this money. After 10 साल, so consider an average inflation of education का 10%. So figure out कि अगर 10% से inflation है तो उस 1 crore का क्या value होगा, and accordingly you should start putting your SIP investment or whichever asset class depending upon the risk profile you're going to pick up, right? So it's very important to factor in the inflation also before you start accumulating money for any of the financial goals. All right, so people keep asking how to construct a portfolio. A robust portfolio बनाए कैसा जाए, right? So 100 minus age, this is not a thumb rule. The 100 minus age concept is not at all a thumb rule, but most of the certified financial planners keep practicing this. So 100 minus age, जो भी आपका age है, the money should get into equity. So this is equally very asset allocation and portfolio rebalancing. So what are the factors one should consider before creating a portfolio, or how to do an asset allocation? Risk profile of the investors and the financial goals. Assess your risk profile. Aapka risk profile hai kya? Let's imagine quickly. I'll give you an example. Let's say you have got a 10 lakh, the market corrected by 30%. You have lost 3 lakhs. I mean, after 30% correction, does this correction and the loss which you've incurred in portfolio going to impact your lifestyle? If any of a financial goal, this is how you can assess your risk profile. So risk profile of the investor and the goals, liquidity is very important. So someone who's at the age of 70 plus, it's very important that he should always maintain 80 to 90% liquid portfolio. So at any given point of time, press the button, the money should be available. But how about someone who is young, 30 years, has got a long 30 more year professional career left out, probably, he can get into all those lock-in asset classes. So macro of the economy, local and local, these two factors are very important. So most of the people or the wealth manager consider only the local health, local economy health. No, it is very important to understand what's happening globally. US में क्या चल रहा है, यूरोप में क्या चल रहा है, how the liquidity, what's happening in the China. So considering all these, the health of the economy of this large economies, it is very important to construct the portfolio. So interest market scenario kya chal raha hai? So what's the interest rate which is going in the US? What's the interest going in China? What is our current interest rate going on? So inflation kya chal raha hai? The geopolitical issue. So one has to really factor in all these things before you start making an investment, or you start creating a portfolio for yourself. And generally, it is very important also to keep on rebalancing the portfolio. So it's not about rebalancing. हर महीने हम rebalancing कर रहे हैं. But yes, if the valuations goes up, right, interest rate market scenario changes, various macro fundamental changes, right, you need to really rebalancing your wealth. So what are the various factors we should, or the point we should look at? Check for the opportunities within the large cap, mid cap, and small cap, because sometimes it may happen. Uh, Small cap is expected to perform much better than the large cap and a mid cap, right? You need to restructure your portfolio. Sometimes you need to be overweight on a small cap and underweight on a mid cap and a large cap, right? Check for the opportunities in the debt when the markets are at high PE. So currently, if you look at the valuations of the high PE, you need to figure out how to restructure the portfolio. Shall I book the profit or shall I remain invested? So you need to really sit and discuss with your wealth manager what is to be done at current levels, because we all know that the valuations have gone up. Check for the sector opportunities and the valuations to increase equity allocation. So I am saying check for the sector opportunity. Reason being, if you look at the entire 28, 28, 13, 20, all are overvalued. So अगर सारे sectors overvalued है तो हमें कौन से पॉकेट में पैसा लगाना है, कौन से सेक्टर को चूज करें, आईटी सेक्टर चूज करें, हेल्थ केयर सेक्टर चूज करें, या capital goods choose करें. So you need to figure out where are the opportunities available. Hence, it is very important that you should restructure and rebalance your portfolio accordingly. I'm sure that if you each one of has a wealth manager, probably he will keep on he keeps on discussing with how to restructure the portfolio given the current market scenario and the macro fund. All right, so these are the risk return matrix. So if you look at the returns, so higher the risk, higher is the return. So let's say, for example, someone who's got time horizon of 0 to 3 odd year should only be investing into the fixed income options, right? Someone who's got a time horizon between 3 to 5 odd year should investing into equity mutual fund and equity PMS to generate a better risk adjusted returns. So someone who's got a time horizon more than 5 odd years should get into alternative investment fund options. So since PMS on a daily very careful before taking PMS. These are expensive product, right? The expense ratio is near about 2.5%. You have to figure out what other expense PMS has. And the concentration risk in the PMS, because the construct of the portfolio is based on 50 to 20 stocks only. So there are more than, I think, 300 portfolio management schemes currently running. So you have to pick up as per your risk profile in a time horizon, right? So these are in fact little expensive. There is a concentration rate. So before PMS becomes a part of a portfolio, you need to have really, you should be actually assessing the risk through your wealth manager. So no, alternative investment first. When in fact, when the rate of interest got dipped during the pandemic, people started exploring what are the different avenues available in the fixed income space to generate higher returns. So suddenly we have seen there is a lot of attraction into AIF2, because category 2 alternative investment funds has a potential to generate returns in the range of 15 to 18%. So I know that it attracts a lot of money, but there is a lot of risk also associated in category 2. I'm starting with category 2 reason being this is the most popular among the ultra HNI investors. So where category 2 actually invest money, these invest into credit opportunities, distress, just private credit and the real estate credit. But the fund manager actually insulate the risk in such a manner. In fact, in case of any credit event arising, right, there has to be a ring fencing strategy from his side that yes, you should be taking the least betting on your portfolio. In case of a category 1, generally the fund manager invest into venture capital fund, invest into infrastructure projects for small and medium enterprises. So these are the new ventures where the risk is high, the returns is also very high. So category 3 is purely based on the equity, where it invests into equity long only hedge funds, long fund strategies. So purely trading strategy we generally avoid making recommendation to invest money into long short strategies. So trading से पैसा बनता नहीं है. So it's good always to pick up some funds where you can remain investor for 3 to 5 years to generate better returns. So before you pick up any AIF in your portfolio, it is very important for you to assess the risk. Do not only look the attractive returns which category 2 generates. It is very important to assess the risk also, because 16% का fixed return है, तो obviously वहां पे risk भी होगा. But fund managers and these asset management companies are pretty smart. Before they lend 100 crores of rupees to the companies, they in fact have a collateral in the range of 1.5x also. And at any given point of time, they default on the interest payment, they sell all those assets. So yes, there's a lot of ring fencing is being done by the asset management company. It's not that easily they give the money. Okay. Again, this is one of the most important slide, because I think after looking at this slide, you will reach back to your all wealth manager asking how you restructure my portfolio, how you evaluate my investment portfolio. So to evaluate your investment portfolio, these are the few things you should be most of the time considering. I'm sure आप लोगों के wealth manager करते होंगे. So portfolio construct as per the risk profile. So whenever you're constructing your portfolio, it should be strictly with your risk profile. Debt equity का allocation क्या होना चाहिए? How much money should be into debt and how much money should be into equity? Liquidity in the portfolio. So most of the retirees I've seen south side also. There are portfolio where money of the portfolio is liquid, the 50% of the portfolio is illiquid. So always remember, when you get retired, there minimum 80% of the liquidity has always to be maintained in your portfolio. Button दबाइए, आपका पैसा आपके account में होना चाहिए. So do not compromise on the liquidity, right? And also when you have ample of liquidity in the portfolio, it is very important for you to strike the right ratio between the physical asset and the financial assets. बहुत बार हमने देखा है लोगों ने रियल एस्टेट में ओवर एक्सपोजर लेते हैं, right? And considering that they are making a great return, but honestly speaking, barring the last 6 months, real estate has generated zero return. Barring the last 8 months, real estate में कोई खास return generate नहीं किया है. But you have to strike the right ratio between the physical assets and the financial assets. Because once you're making 70 to 80% only into the real estate, it's very difficult to restructure and rebalance your portfolio. मान लीजिए 20 से 25,000 का, तो 25,000 से अगर आप मल्टीप्लाई करते हैं तो 3 लाख रुपए हो गया. द रेंटल yield comes to 3 lakhs. आप उसमें 33% का अगर आप टैक्स फाइलिंग करते समय अगर आप मेंटेनेंस भी क्लेम करते हैं, post taxes your rental is not more than 1.8 to 2%. So why we are buying, right? So it's very important before you buy any real estate, you have to consider lot many other factors also. Now look at, it's very important to evaluate your current portfolio also. So current portfolio में benchmark ने कितना रिटर्न दिया, आपके पोर्टफोलियो ने क्या रिटर्न दिया. So you shouldn't be only looking at, no, my advisor is saying that no, I'm generating 10 to 11% kind of return, but you need to figure out what kind of returns the benchmark have generated, whether it is underperforming or overperforming. So portfolio benchmark, portfolio performance versus the portfolio benchmark. Portfolio fund risk starts is equally very important. Sometimes, I'm 60 years, but most of the funds which I'm holding in my portfolio having a beta higher than 1. So you have to keep on evaluating the various risk charts also. Alpha कितना है, standard deviation क्या है funds के, beta क्या है, tenor ratio क्या है. So I'm sure if you have a great wealth manager, learning and qualified certified wealth manager, he must be keep on evaluating your overall portfolio risk charts. ये बहुत ही important जो कि India में है. So most of the wealth manager, they will come back to you, they will only evaluate the investments which he has done for you. But आपने म्यूचुअल फंड में इन्वेस्टमेंट किया, लेकिन आपका इन्वेस्टमेंट कुछ डिपॉजिट में भी है, आपका इन्वेस्टमेंट लाइफ इंश्योरेंस पॉलिसीज में भी है, आपका इन्वेस्टमेंट कुछ अदर एसेट क्लासेस में भी ऐसे भी हो जाता है. So what you need to figure out what is the return you are getting on the entire amount. So because eye-opener when we started practicing in the private wealth. So the moment we are going to factor in your life insurance policies, your uh, uh, NSC's investments, your senior citizen investments, bonds investments. So probably two things: one pre-tax, one post-tax. So there are people who are very happy that pre-tax I'm making 8.5% CAGR return, considering that my risk profile is conservative. Post-tax consideration was only 5.5%. We were not able to, I mean, the portfolio was not beating the inflation also. So it's very important to evaluate the portfolio IRR. What is the post-tax returns? What is the pre-tax return? So you can restructure accordingly, right? So this is one of the most important slides. I think I've covered most of the aspects of how to evaluate your investment portfolio. Right. How do we stand out? So we have got a robust team. In fact, we are the one company who focus a lot on human capital. For me, what is the two most important thing? One, the qualified, certified wealth manager. Second is the robust technology platform. Since we are managing clients across globe, it's very important I should have a robust technology platform. So हमारे लिए दो चीजें बहुत important है. The wealth manager who is recommending or who is advising to my client should be either chartered wealth manager, certified financial planner, or a CFA, chartered financial analyst. So protecting wealth and transmission of wealth. So most of the clients, in fact, in India today also, 90% of the people don't make their will. Even they don't want to insulate their wealth by even creating a trust also. So this is one aspect which is missing. और हम clients, हर client को जिसका portfolio manage करते हैं उनको बोलते हैं कि नहीं, will is the most important aspect. Nominee, there are many people who feel that no, nominee डाल दिया तो काम करते हैं. No, nominee is only the caretaker of your money. All right. So our services to support this structure, we have got qualified wealth managers. Someone who is not certified, right? He will not be advising to clients. It's very clear in a mandate from management. Second, dedicated service manager. So we across all the large portfolio which we are managing for a private wealth and a family office, there is a dedicated relationship manager, there is a dedicated service manager, right? And there is a dedicated CEO also. So even regular interaction with the product team. So Ritvik is one who is heading our product team, and we try ensuring that even my product team keep interacting with the clients also. Unit sets, VPAF, they also regularly interact with the clients. Now we have got a superior technology platform. We have got an app. We have got an app where you can, by click of a button, 24/7, you can monitor what's happening with your portfolio. So even me and Charu also prefer interacting with your clients at any given point of time. We are very easily accessible, right? If there is compromise on the services standards, you can reach out to us, you can write to us, and there is a mandate that we should be responding within 24 hours. So these are our group companies. We have Wise Investment. We are there in the India since last 13 years. So Wise Investment for the one which we formed early. We have Wise Finserv Private Wealth. We have Wise Finserv Insurance Marketing. We have Wise Funds. It is 100% paperless transaction platform. Sign करने का जरूरत नहीं है. Right. We have Wise Bonds wherein you can reach the website. You can pick up bonds. I think 1000-1500 से भी ज़्यादा आपको यहाँ पे bonds मिलेंगे जो आप use कर सकते हैं. So thank you very much. In case now you have any specific questions regarding investment,